it's a good team.
All right, folks, welcome back. Another episode of Chart Talk. Happy Monday. Love to kick off the week like this. Ben, how you doing over there? You staying strapped? You everything all good?
Yeah, I'm strapped. I'm ready to go.
All right, thank God. I didn't get the memo. I brought a knife to a gunfight today, huh?
Yeah, I guess you did.
Let's dance, dickweed.
You want to dance, Ronnie? I want a polka.
Come get a taste.
Yeah, just like that. I'm smoked. Without further ado, let's jump right in, huh? Market outlook. All right, so market outlook. So we saw this uptrend. We saw the pressure come in the last few weeks. Off highs, we sold off pretty hard. We saw a lot of rotation out of these NASDAQ names and all of that. And then today, we had this Monday morning gap down, some lockdown fears, and there's some very obvious rotation to me. I'm bringing up the heat map right now, and we saw this huge rotation out of all the value names, out of all the quote-unquote reopening stocks, those value names, the healthcare, financials, industrials, all like the regular economy S&P stocks, and we saw the all those lockdown stocks, the Pelotons of the world, the Zoom videos, Chegg, Spotify, all these. Roku was up massive. All these lockdown stocks started catching a bid today, which is a bit scary in the grand scheme of things, with Europe locking back down. But I mean, we just saw that massive shift again. Is there a bottom? Is today the bottom in for the S&P? I'm not sure. I'm not trying to call that. I think we might have still more downside ahead, but there is a lot of strength out there still. So I was buying some things today. But what are you thinking out there, Bennett?
I have very similar thoughts. I'm going to pull up the first chart.
I got it.
Yeah, so again, you mentioned before, we talked about a lot of prior chart talks. We've been in this prior uptrend for months, and now we're starting to see the flip side of it as the market does pull back. For the SPY, 320 is technically would be correction territory, about 10% drop off all-time highs. But we're just seeing this overall theme of, lower highs and lower lows, which until that trend changes, you got to be a little bit more light and a little bit more nimble, in my opinion.
I agree.
We can, and even sector-wise, if you go to that third chart, the VPU utility sector, among out of the major sectors that you can scan through, a lot of them have this same lower high, lower low trend. Where for VPU or the utility sector, it's more of a risk-off sector. It's where people kind of run to when things get a little bit scary. So this could be a sector that we could look to buy after 127, or just keep an eye on utility names in general for any setups. As other things are kind of pulling back in, like tech and healthcare.
Cool.
A little piece on the market outlook. If you want, we can jump with member ideas.
Yay. What they got for us?
All right, so we got Anish is looking at NIO through 20.
Completely a momentum trade. We talked about this name. Someone asked us about this name when it was like $12, $13, and we were talking about how as long as you were trading it against this gap, because if I'm not mistaken, this is a technically proficient chart where it's got this long-term resistance. It gapped up and turned that area to support. And now it's working on this kind of sloppy momentum flag here. So what do you say, through 20 or 21?
Yeah, through 20.
Yeah, I mean, if it gets that volume and momentum, it'd have to be similar to this August 25th action. That's what you're playing for in this one. I'm not a fan of doing that as much as I am buying against this support level and kind of letting it work for itself. But see how it sets up. These names have been going crazy, these electrical vehicle names. I don't love it personally, but I see the trade.
Let's see. And next we have, all right. His next question was, what makes a retest happen? Does it happen because folks who missed the boat the first time start buying around the breakup? He's asking about a retest. Like, why does that occur?
I mean, on a very simple aspect, we can look at this NIO chart and look at this retest, and it's just buyers testing sellers. We know areas of support are areas where buyers are, and areas of resistance are areas where sellers are. And then when we see it break through, this is how charts grow. For example, this area of new support, where it was this previous resistance level, it turns it to new support, and that's the most healthy thing you could see in a chart, and it retests the level a few times before it made its way higher. And then again, you could see it retesting these buyers right here, this little dip, whatever it was, September 4th, and the buyers are maintaining they're in control. Retests are completely healthy. They're like the number one thing to look for in stocks, number one thing to look for secondary entries, things like that. Why do they happen? Buyers meeting sellers, and that's what makes a market, really. But
definitely. I mean, and even for Anish, think of, for you, if you bought a stock say you bought NIO at 21 the first time, and you held it back through 17, and it's getting back to 21, the first thing you're thinking to do is, I cannot wait to get up even.
Okay.
So it's like you're sitting there with that limit sell order at 21, and you're creating resistance in the stock. And just like you, when everyone else who also bought that stock at that same price is also having that same thought of that pit in their stomach as the stock drops 10, 15, 20% in your face, and then you can't wait to get back and sell it at that same price to get out and move on, because then it can't go higher.
Right.
And that we see that even like with Tesla, the people that bought it pre-split at 500. I had a buddy of mine who he put like 100,000 into it the day it split at 500.
Stop, really?
Yeah, and again, he's like the NYU. He was like the epitome of like our first group of traders at our old firm. We're like they're the smartest guys in the room.
Yeah.
Puts 100K at $500 a share, and the first day he's like, I'm selling it when it goes to 1,000. I'm gonna make 100,000, $100,000 profit because it'll go up 100%. It drops down to 320. And I don't even hit him back up, but when he texts me again, he goes, I cannot wait to sell this thing for break even. And that's that exact question that he's asking. It's, when you first bought it, it's you cannot wait to make 100% or 100 grand, whatever the number is. And then once it starts pulling back against you, it's switched to I cannot wait to get out break even because it can't go higher because of whatever thought is in your mind. So that's usually why it happens. And we see that much more names that get very extended when larger crowd kind of runs in.
And while we're here, the number one trading mistake I see out there for new guys, old guys, whoever it is, only thinking about upside, never factoring in downside. Even when buying momentum off the open and things like that, if you're only thinking about upside, you probably shouldn't take the trade because you're not mentally factoring in the downside enough. But we can move on. I just wanted to mention that.
You guys like that little 2 minutes sidebar? Maybe smash that like button and maybe give us a little share if you guys find these videos helpful at all. Next, we got Ricardo. He's asking about Netflix. He wanted to buy it through 480, so he's more than likely already in. Well,
no, this is another one of these lockdown stocks that got the love today. I like this. I mean, I have so many stocks. The market was down today. We see this disgusting red heat map, but there was a lot of sneaky strength out there, and Netflix was one of the names that fell into that category. So names that are strong during a weak market, when we stabilize, I feel these names are going to explode. So I like this Netflix a lot.
Now, for say Ricardo did buy 480, are you going to still kind of maybe try to kick some into 500, or are you going to try to maybe be patient and hold it into the upper end of that range?
I mean, the way I trade, I'm going to take some off into strength, and then I'm going to give some a wider stop based on risk reward. So maybe I'll kick some into this 505 area hypothetically, and then hold some for the bigger picture. The reality is that even though the SPY put in a nice little hammer today, the short-term trend is down. So it's like, yes, I see a lot of people wanting to buy tomorrow now that we saw this action, but the reality of the situation is we have a lot of overhead resistance still, So I'm still a little cautious on this market. So, yeah, I would take some off before like a retest of highs.
Gotcha. And I feel like even for this downtrending market, you almost have to buy on this, the scary days on the way up. You can't really be chasing day 2 or day 3 because that tends to be like the end of that overall move.
So it's such an important fact right there. So many guys don't realize that. You got to buy when it's scary on days like this, and the chasers are the guys who usually get punished.
Next up, we got ACAM through 111.
ACAM
110 half.
Yeah. This looks good. Through this little area. I mean, it's far off support, and it's 3 days up. That's what makes this very tough, is that support's down at 104. So if you're buying this through 111, are you giving it to 104? I don't know. That's a long way to give the stock, 7% or so. So unless, you just got to give it to this 104 area, or else it gets pretty tough from there.
Yeah. All right, next we got Facebook.
Book of the Fosh. I see it. I see what people are looking at. The thing is that, and this would technically fall into one of the categories of lockdown stocks that was somewhat strong today. But the thing is, all right, we look at Facebook and it has this beautiful, and it's like a stronger chart. But then look at Microsoft. Look at the candle that Microsoft put in today. Buyers wanted Microsoft. Buyers didn't really want Facebook today. Could this trade work out? Absolutely, sure. But I want to see stocks where the buyers really showed themselves today. So Facebook, it's on my radar. I keep it on watch list. I like the retest of highs here. I'm personally not buying it, but I could see it working out. So,
all right. We're kind of covering a lot of these FANG stocks. We got Amazon next.
Yeah, Amazon, another one. They showed the buying, a little test of the 100-day here. So I like Amazon tomorrow. I like these names. They showed strength in a weak market today.
And then last up for Ricardo is this Google.
Google?
Verse 1400.
Yeah, that one's okay. I mean, it's not as you saw. It didn't get the same love. Amazon and Microsoft got some love today, while Facebook and Google didn't get that much love. I want to see those stocks get love on weekdays. That's what really draws me to them. So Google, I would take Amazon and Microsoft over Facebook and Google with today's action.
Gotcha. All right, and last question from Member Ideas is, what's a simple way to spot relative strength? When
the market's down and everyone's bitching and moaning, that's when you do some fucking research. That is research time. That's when you make the most money. People don't realize that. People take these things so emotionally and, oh, my stocks are red, blah, blah, blah. Like the things that's going to make you the most money in the next 4 months is seeing what's getting that strength now. And I got a list of 50 stocks I'm ready to buy, when I see some more positive action out of this market. And I already started buying some of them. But it's the importance of on the down days when everything's getting shit on, that's when you got to be in the desk typing shit up.
I love it. All right, so we're going to jump into some of the social media questions. Again, some we're going to embarrass some of these people because they're hilarious questions, but some are pretty good. So we're going to start with the first one. Tight Key, he asked, do you think pharmaceutical and tech companies are a bubble due to the corona vaccine?
I mean, valuation-wise, a lot of these things are very bubbly. They're trading at crazy sales. We have this Snow IPO that's trading at like 300 times its sales. So, are they probably going to crack at some point and pull in? Maybe. I don't know. That's just too macro of a question for me to answer right now. That's not really where I lay my focus. If you got any help for them.
No, I was the same thing. It was like, it's too broad. If you're picking, those specific names, 100%, but broadly, it's like, if you're just buying, the IBB, that's not, the entire pharmaceutical sector is in a bubble because of, what's going on.
Right.
Next, we have VALE.
Vale?
Yeah, Vale.
And they like it?
Yeah. I'm going to, again, no game plan, just a stock. I'm going to say he wants to buy through 1135 versus 1075.
So we're seeing, this is a very important area, this previous resistance area, now an area of support. We saw the buyers tested there today, and they showed some strength. So if the buyers can push up off this area, then the buyers are still in control. If the sellers push through this area, then they're in control. It's that simple. So if it can push up from here, then it makes sense for a support buy.
Mm-hmm. It's just like for a name like this, if even you zoom out the last couple of years, even trading the same perfectly, you're going to get $2 or $3 move in this name. And this is kind of why we avoid these cheaper names, because to get $2 or $3, you're still risking $1 or $2 in this name, where it's, even if you're absolutely perfect, you're 1-to-1 risk reward at best, and it's very hard to achieve 5-to-1 or 10-to-1 trade in a cheap name like this. It's only going to move $1 or $2 in 3 or 4 months, and that's one of those bigger lessons that the new trader has to learn, is just the risk reward isn't in our favor in these types of setups unless you have a very long time frame, and most people unfortunately don't. Next question is Trade on Purpose. He asked, how come no swing shorts for you guys?
I swung this Spotify swing short. We'll talk about it. I'll talk about a good trade, bad trade. Got you, baby.
All right. Okay. Next, we have Gav.Ocean. He's asking about McDonald's. He said, with the recent gap down, do you think that the overall uptrend in McDonald's is over?
Oh, okay. I thought he was asking, should I buy it because Travis Scott? No. What you got to do in these situations, check out a weekly chart. This thing is still in an uptrend on the weekly chart. Yeah, it was down a few days, but and even a monthly chart, this thing looks like it just wants to go sideways before it can go higher. So one day doesn't signify a break of trend unless it's like a crazy day. Down 1.75%. I think this is just pulling back with the market weakness.
Mm-hmm. This is a name, even like if you like that 220 is such like a solid level going back to mid 2019, where if it gets right back to 220 in a month or two or a couple weeks, I'd have no problem rebuying that back up for that sneaky buyback versus thinking it's going to go back to 100 because that's where it was a few months ago.
Are you going to tell the market maker that Cactus Jack sent you?
Yes, 100%. All right, so last up for the social media question is I can't pronounce his Instagram name, but his question was on Roku, and he asked why is it at all-time highs today.
So Roku, lockdown dandy. I mean, these lockdown stocks are killing it. They had some positive news on their end with Peacock, the NBC news streaming platform. They didn't want to put it on the Roku platform, but now they decided they're going to, and that was the positive catalyst today. It's up 18%. But this is just one of those other lockdown stocks that killed it, and this is a beautiful chart right here.
Mm-hmm. And this is even like a great example, even earlier with Anish's retest question, where if we, say you draw like a horizontal line over, say 177 in Roku. So let me know when you have that up.
I got it. Oh, I got
All right.
it.
So if we see back in September of 2019, we can see when Roku kind of ran up to that 176 and it got destroyed, it got smacked. All this time, anyone who'd bought that time, which can be a very small amount of people, but that was like the all-time high. So as it runs back into it, it gets met with sellers who just don't think the stock can get higher, pulls back in, and then that third time through, those buyers are ready. Everyone who's trying to sell it has kind of moved away, and now it has that freedom and that room to run into these new highs. So hopefully these can keep knocking on these retest lessons. All right, so next up, Shape, we'll jump into good trade, bad trade. We have Tyler Kenny with his PTown trade.
All right, I got it up. This looks like it has your name on it because I can't really read it.
Can't read this font.
Yeah.
Size 0.8. All right, so we have for Tyler Kenny and Tyler, please get us an update of your buddy who bought those SPY all-time high calls that were for a fact going back to all-time highs from last week. I would love to see where that guy is today. So for PTown, let's see, he bought it up through 84.5. You can see that first red line. That's where his initial stop loss was. He kicks some into the retest. Again, we've been kind of hammering on this retest question this entire video, where you can see that prior high. He sold into it. It had a little bit of a push through, came back down. They shoulda, coulda, woulda. He didn't re-add. Again, this happens a lot in trading. But then he held it for that bigger move and kicked into strength, which was, I think, that's a phenomenal trade. Like just like you were saying, Jake, you want to kick some into strength. You want to hold some with a bigger move, and I think this kind of falls, hand in hand with exactly how you've been trading recently.
Yeah, this is nasty. This is great trading.
Yeah, and of course, when the market's a little bit weak, most people don't really want to be showing, the losers, and so it's been a little bit quicker of a video. So that's the only member good trade bad trade for this week.
All right, cool.
So we can jump into, and I'll actually have one as well. If you want to do mine, and then Jake can go into some of yours.
Yeah. Let's see it.
All right, so you can pull up that Triple M chart.
I got it.
All right, so this was a support buyback trade we've been in since August. We bought up through 152 versus that 148. Very tight risk trade. We kicked some into that resistance area that I have that dashed line, which was the resistance area. We kicked some initially, and for the remainder of that stock, I kicked 2/3 into that. I had 1/3 remaining. I was willing to give it back to break even. As it started to flag under 160, it was showing me pretty much clear as day that if it go, at that point I can easily raise the stop from break even to 160. It took out that 168 resistance, pulled back, took it out again, but again didn't have the momentum and came back and stopped me out today. But very simple trade. It was one entry, 2 sales, and just a simple swing. And now it can set back up, and if it sets up, I'll get back in. If not, on to the next one. Shake, you want to go over some of your trades of?
Yeah, I got 2 for you. So I'll start with that good trade. Was this swing short I had in Spotify. So, all right, so I got the trade up. All right, so we see this huge support area that Spotify is showing right here on the daily chart. So I was actually taking this long to start. So you could see I was buying this thing as a long, and then it was such an inflection point in the beginning of the day that when it closed so weak, I actually got short here. And then, so the next day, you get a little luck on your side. Apple announces their new streaming bundle. How they're streaming Apple TV, Apple Music, all these things for like $15, and that's what Spotify is a month. So they got hit on weakness for that. So I'm covering a lot of my position into that weakness the next day, swinging it short. So it's very difficult. But this is why I'm telling you guys to be always taking information and not be looking at P&L so much. I lost a few grand on this loss and then I still flipped it short and put that few grand risk on. So I put myself liable to take 2 losses in the same name when it didn't really do that much. That's difficult. But if I'm only worried about P&L, I'm not able to make that trade. But because I saw the action and I got so much information off the name, it couldn't bounce at this major support level. Okay, it's probably going to fall. It's probably going to break the support level to the downside. So it does. I cover it, and I cover more later in the week today. Maybe was it today? I think it was today. Was it? Yeah, it was today. And you can see it's starting to break up. And I actually bought some in my long-term account now as it's kind of looking to break this inflection point higher. So that was my good trade. And let me show you my bad trade. And this is the difficult part about trading these motherfucking whipsaw markets. My computer's not working here. So I get a lot of questions like should I change my style in these whipsaw markets? Should I become more of a day trader? All that. And honestly, I tell people you're not really trading for income. So I don't really see a point in it as much because it's so difficult. And I'll show you why with this trade. Where it's like I had a really short bias on the SPY last week. You know, you'd see my good trade was that Spotify short, and then my bad trade is this SPY short, where I was so right in the trade, but I got smoked in it because I mistimed it. I timed it wrong. I was too cute with my outs. We could see this 343 resistance area, and it pierces 342.50 to the upside. I took a big old loss. This was Tuesday I got in. Then Wednesday I added to position a little bit. I got pushed out with the Fed, and I took a big old loss. It doesn't look like much, but I was really heavy. And then the SPY comes in like 8%, and I was super right, but I lost money. So those are always the most frustrating trades, right? When you're shaking out, but you're right. So I just want to show everyone, you know, the difficulty in being in these really cute active trades. You know, whereas if you're seeing the bigger picture, you don't have to get frustrated like this, where it was like I was super right in the trade, but I was super wrong with my executions, you know, by 50 cents. So just kind of showing you guys like how much easier it is to, you know, just play the long-term game, play the swing trading game. You don't have to be as active as I am out here. I definitely make the bulk of my money swing trading, probably like 85% of it compared to like the 15% I make, you know, active trading. It's almost like to keep myself busy and get information on the market. But that's what I got. What do we got from here?
Top ideas.
You want to start? I was just a little word heavy there.
Yeah. All right. So if you want to pull up the first chart, we can just go through them each. So we got Hasbro. We got we can see this, little clear line of resistance. Really, 84 is the bigger area of that breakout. But again, I want to be perfect trying to buy 84. So for now, keep it on 80. Don't expect to really go in anytime this week, but just on the radar. This INSM 34 has been a pretty big level. Again, I had a really big 2 weeks, so I really would like to see this consolidate a little bit.
I like that INSM.
Yeah, and if you really zoom out even more, it just, it's hard to see the 34 level, but it's been a pretty significant level going back, many years. So that's definitely one on the radar. PCTY, that 150, again, 155 is the real all-time highs, but we're trying to, sneak in a little bit before that level so we can, get a little bit better price. SFIX, recent IPO.
They got earnings tomorrow. I love this chart, but
yeah. So this is a good one.
I can't wait to see what comes to these earnings.
Yeah. So this is one where if it blows through earnings and it's up 32 or 34, that's not really the trend I'm looking for. But if there is that trade through 30, that's what I definitely want to be involved. And then lastly is this Williams Sonoma. We took this through 88, back in the middle of summer or end of summer, should I say. And this is what we call the sneaky buyback, when we were hawking this thing every single day leading up until August to 88 breakout. And just like us and other traders, when you have to take the trade, you kind of forget about it and it kind of falls off your radar. And that's sometimes you get those trades that they just kind of drift higher because everyone's not really watching it. So this is one I am keeping on for that 88 break, because we can still see those lower highs when it does come back through and test 88. So those are the few that are on my radar for the week ahead. Nice. What about you, Sheikh?
So I want to find the names that I saw a lot of strength in today. And we got a whole list of them ready. This whole relative strength, and it's like, oh, the market was down. You wouldn't know it looking at these names. Fastly up 10, Zoom up 7, Chegg up 6. All these names, NCNO, Band. So I'm looking at this Spotify, as I mentioned. Holding this 100-day simple moving average, couldn't really break down from this huge inflection point. It had the one bad day, but the buyers swallowed it up in the grand scheme of things. I like this Pinterest still. Hasn't really flinched, near an inside day. And if we look back on a weekly chart, just how important this 37, 38 level is, that looks really good. This Upwork's a cheaper name, but package software name. These names have been killing it. Really tight flag, $15.50, $16. And then I'm just going to keep hawking all these other names, these Twilios and all the software names, the Coupas, the teams, they're all so strong in a weak market. You know, what's going to happen? They're going to explode when the market stabilizes. So that's where I'm laying my focus these next few days.
Nice. I really like that Pinterest.
Yeah, buddy, Pinterest.
Recent IPO
Etsy looks
high.
fire. Yeah, and the fucking earnings are amazing. Sales growth out the wazoo. Just a really, really good looking setup right here.
All right, I think we cover everything. I think we'll jump into Book of the Week.
All right, let's jump right in. Book of the week, Bennett. What you got for me over there?
All right, so I just finished reading a book on Etsy that honestly is not
On like Etsy the website, or like
like how to do like Etsy marketing and Pinterest, and it really was like I give credit to the person for selling the book because it was like how to create your Instagram username and like the actual steps to do that. So it wasn't really worth mentioning other than this. But so I'm gonna go back to last week. Your next 5 moves. We talked about this privately. I know you're a big fan of the book. So
I just ordered this myself. This sounds amazing.
Yeah. So I knew you were a fan. So there was one of the lines that I think it's somewhat relative to our members is commitment to constantly beating your prior best is far the simplest and best proven formula to eventually find yourself at the top of the game in your respective industry. And I think we see that a lot where, especially like the newer members who maybe are striving for their first comma day, and they'll see someone like Adam put up a 100K day, or they'll see you put up 20K in S-Fly, and they'll be like, well, he made that much. I can never do that. And it's like, you can't compare yourself to that person because they're in a completely different part of their life than you are right now. So to focus on, if yesterday you couldn't make a $100 day, that's what the goal is. And you chip that off, and then 250, and so on and so forth. So that was a very relevant lesson that we see a lot, especially with the younger guys.
Yeah, I think one of the biggest fallacies in trading personally is just playing the comparison game in any aspect, comparing yourself to any other trader. You're really only playing this game against yourself. And as soon as you start comparing yourself to other people, you're just throwing your own emotional sense off, and you know, you're not thinking logistically and all these other things. So I definitely am pumped to read that one.
What about you? What do you got?
Ooh, I got a classic for him. I got him a little Michael Lewis, a little boomerang. So this is like one of the most captivating books I've ever read, where it was like he breaks down the '08 financial crisis and kind of the credit bubble and how it popped. But he starts with like how the Swedes messed up and how the Greeks messed up and how the Irish messed up, and then brings it back to how the U.S. messed up. And it reads like, you know, like a fiction book. It's so captivating the entire time, and he really tells the whole story so clearly. So this is anything by Michael Lewis is always a recommend. He wrote Moneyball and The Big Short and all these other things. So Boomerang, big winner.
I'm gonna have to pick that one up because even for
you never read this? This is sick.
No, but I've read a few of them, and I feel like some of the books on the financial crisis, even if you're in the industry, it can be such a difficult read.
So dry. So dry.
That it's actually ordering right now.
Yeah. You just do it after the show. It's all right, without further ado, folks, good seeing you this week. We'll see you next week.
Good luck. Happy trading.